In this week's episode of the Stockscores Market Minutes, I'm going to show you how you can make money from a stock market crash. I will do my normal market analysis. We'll try to figure out if another crash is coming. We'll do a market scan in search of opportunity and the day trade of the week on IGC. So how do you make money from a stock market crash? Well, in the context of the COVID crash, it has really changed the dynamics of the market. What it's done is made investing in exchange-traded funds less desirable and made trading in individual stocks much more desirable. It reminds me of when I first started trading, when the market was dominated by people picking stocks. You've got a lot of people who have more time on their hands, the ability to stay at home and trade the stock market, and that has brought back the retail investor. Now, the retail investor, which is really you and I, generally speaking, are more emotional, more likely to chase stocks higher, more likely to stick with a losing trade. Now, those are emotional characteristics of, let's call it rookie traders, and there's a lot of rookie traders in the market right now that can be taken advantage of because they chase stocks higher and they're more likely to hang on to their losers. So the result then is it's actually a much better trading environment. We've got so many stocks on a daily basis that are making big moves as they are being chased by the non-institutional money. They are being chased by the retail traders and perhaps the computerized algorithms that take advantage of them. So if you want to make money from this, what you should study more than anything else is investor psychology, human psychology, fear and greed. What causes people to have that fear of missing out, which makes them chase stocks higher? What is it that creates the greed that makes people stick with trades even though they're up a lot that maybe will make them a little more? And so if you can understand human beings and their psychology around fear and greed, you can make lots of money in this stock market. All right, so now on to the US markets, where we will take a look at the S&P 500 first. This is the 30-day, 60-minute chart. And you can see that the trend is up. Buyers are in control. There was a little bit of sideways trading at the end of the week last week, and we're starting to build a little falling top. So there is some concern that maybe we will break this upward trend, but it's very preliminary. So what I want you to watch for next week is if the market starts to break down through this 336 level and maybe starts to threaten this upward trend line with some sharp downward moves, we may be starting a little bit of a pullback in the market. It's, I would say, overdue for a pullback, so let's keep an eye on that. For now, it's good, but I'm going to lower my rating a little bit because I do think we could see a pullback near term. Looking at the longer term chart, you see why there would be a pullback, why the buyers would be hesitating. Simply, the market has made a great rally. The COVID crash is over. We've recovered all of the losses. We are now back to the all-time highs, and that is a place where the market is likely to get stuck. So this is something that I talked about in last week's Market Minutes. The fact that the market has rallied into resistance means there is a very good chance that we will at least go sideways for a while, but also quite possibly pull back. Now, there's no signs of a pullback yet. It's just something we need to keep an eye on, and so let's watch for that. The Russell 2000 is a good proxy for those small cap stocks, and often the stocks that are chased by the retail investor. They like the small cap stocks a little more than the large cap. And you can see that we are in a nice upward trend, but certainly not as exciting as the S&P 500 has been in the last little while. We are still short of the all-time highs. So there's more upside potential in the IWM, the small cap stocks, before they hit resistance. But there is also no real sign of excitement. Again, last week we had 5 pretty boring sideways days, kind of the summer doldrums as the market has been fairly low volume and quiet the last week or two. On to the Canadian markets, and here we have the TSX 60. Same scenario as the S&P 500. We are in an upward trend, but have had a few days of a little bit of weakness, and that may be telegraphing some profit taking coming. No breakdown yet, but we'll watch for that. Onto the longer term chart, and you can see that the TSX is still short of its all-time highs. So it has more upside potential, but if it were to break down here, it would be breaking down from a falling top. So if we do get a break of this upward trend line, that will be from a falling top, and that is bearish. Now that hasn't happened yet, but it's something to keep an eye out for. Looking at the small cap or micro cap stocks in the Canadian market, the TSX Venture, you can see, is in a nice upward trend. Really a top performing market of the last few months, as it is pretty much actually more than doubled off of the lows. And that is largely driven by gold mining stocks, which have done fantastic and which have a great contingency in this market. On to commodities. Let's look at gold. And so last week I said that gold was likely to pull back soon, simply because the trend had gone from linear to parabolic. And when trends go parabolic, that is an emotional chase of that trading instrument higher. And when there is emotion, there's usually a mistake being made. And the mistake means that the market has to pull back to its linear trend line. So that's kind of where the linear trend line is. I think gold is going to get back to that point somewhere on this GLD ETN of about 165 to 170. So watch for more weakness in gold. Doesn't mean that the gold trend is over. It just means that we're going to take some emotion out of the gold trend. Oil, boring. That's all you can say, really. Stable. It has stabilized after the sharp sell-off that we saw in the first 4 or 5 months of the year, but it's really dead and quiet, and there's no sign of excitement there. I think the global economy needs to start picking up before oil can make some improvement. And finally, the fear chart. Fear continues to drift lower. It's still elevated. As I've said a number of weeks, it is still higher than it was, but it is slowly drifting lower. All right, so my ratings then on US stocks, neutral long-term, simply because we are hitting that long-term resistance, but still bullish short-term, although a little bit of sign of weakness last week. Canadian stocks, same ratings. Gold, neutral on both time frames. I just think that gold is due for some profit taking, and that started last week. And oil, neutral for different reasons. It's simply boring, although stable. Light summer volume, and a market that is nearing strong resistance at those all-time highs has buyers less willing to chase stocks higher. There are still hot stocks every day. There is still a crowd of retail investors chasing after hot stocks every day, but you have to be picky and only consider those that are trading with very abnormal volume and good liquidity. Those are the stocks making big moves, and those are the stocks that we try to find every day on Stockscores Active Live. Now, gold is getting some profit taking and oil is boring. Fear continues to slide lower. All right, well, let's move along now to the day trade of the week. And this week, I want to look at IGC, which was one of those stocks that really attracted the interest of the retail crowd. It traded huge volume, made a big move. Let's look at the economics of the trade as we found it on, I believe it was Wednesday, August 12th. You can see the action candle, which is our telltale indicator, something that you get if you are one of my active trader members of Stockscores. I will give you the indicator for TradeStation. And you can see that the stock went very quickly parabolically higher, made what we call a bursting bubble candle there, which is actually an aggressive sell signal. And so many would sell at that signal, which was a +9 RR. The stock that then went into pullback mode, and one of the things we then look for once a stock is in pullback mode is a break of the downward trend line from a rising bottom. And you can see that happened right here. There is a break of the downward trend line, and this low is higher than this low. That tells us that the buyers are taking back control. So there's really two trades in IGC. The opening trade where we had a quick move up, and then the second trade of the day when we bought that break of the upward, or pardon me, the downward trend line. If you very simply bought it on the action candle at the open and held all day, the economics were very good. For $100 of risk, the share position size was 1,240 shares, which was $1,302 of capital. At the end of the day, it was at a reward for risk of 19.8, which meant a $1,980 gain for every $100 that was risked. That meant a 152% return on a one-day hold. And let's face it, that is Pretty awesome. All right, now we're going to jump to the Stockscores Market Scan tool. This tool is useful for the longer term investor, the longer term trader. You can scan the entire North American market looking for stocks that meet the criteria of one of the strategies that you can learn in the investor program on Stockscores. And if you have any interest in that, just go to the Stockscores website and look up trader training. It's all there, lots of information. What I want to show you this week is the abnormal breaks market scan, which is the one that I do just about every day. I run this at about 12 o'clock for me, which is an hour before the market closes, 12 o'clock p.m., whatever time zone you're in, basically an hour before the market closes. I run this scan in search of stocks that are behaving abnormally and showing a good chart pattern on the daily chart. And if I like the daily chart, then I also confirm with the weekly chart. So let's jump over to Stockscores now. I've got the market scan open, and we're going to select the abnormal breaks US strategy. You can see there's lots of different strategies there for different scenarios. We're going to run this one. It's kind of my favorite these days. So we run the market scan. It goes through the entire US stock market and very quickly found 34 stocks that meet the criteria. Now we still need to look at the individual charts of these stocks. We want to make sure that they have the right kind of chart patterns. Now I'm not too fond of trading stocks that are super penny stocks, like 1 cent stocks. So let's just jump past those and jump into the stocks that were behaving abnormally. Now one of the key things I'm looking for is a stock that is breaking from low volatility. So you can see here that Club had almost no volatility, it was very quiet, and then it started to move on Friday with very strong volume. Notice the volume is stronger than any other day. That tells me that investors have found a reason to buy the stock aggressively. And so that's pretty good. Now, one limiting factor on this chart is that there are a crowd of investors and traders from June and late May who own this stock at higher prices. And so they've been losing money for months, and they are going to sell into any strength because they just want to get out at break even. That is just basic human psychology. So there's some resistance on this stock. That's what we call that. And that sort of lowers the quality. So I would give this particular setup a 6.5 out of 10, which means I think it has a 65% chance of working. Now, FAMI on the daily chart doesn't look all that great. You can see that it made a big move to the upside on Friday, but it failed to close near its highs, and that's a bit of a disappointment. About an hour before the close, it was actually quite a bit higher, and it traded huge volume. Look at the number of trades, 363,000 trades in the day on FAMI. Now, what interests me about this stock, though, is when I look at the 3-year weekly chart, you will see a very nice turnaround pattern. And in that, we have a downward trend that has been broken, and we're now building rising bottoms and starting to break from a rising bottom with very strong volume. Now, there is some resistance here at $2. If the stock hadn't fallen off into the close, I would have given this a 7 out of 10. The fact that it fell off into the close lowers the rating a bit. I'm going to give it a 6.5 out of 10. So I do this every day for my readers of my Trade Scores Alert service. That's at tradescores.com. I do the market scan for you, and then I send out an email or a SMS message to your cell phone of anything that I like. These are not day trades, these are longer term trades, things that I think have potential to develop over the weeks and months ahead. CLPS looks pretty good. You can see that the stock has a pattern here called an ascending triangle, and it's breaking out through resistance from an ascending triangle. Volume is not great. It's better than normal, but I wouldn't say it's excellent. So I'd give this a 6.5 out of 10. Continue to move along. I don't know that we'll go through all of these. GNPX looks pretty good, but more so if you are in this stock already. I don't know that I would necessarily chase it here, but if you're in GNPX, it looks pretty decent. Merrimack, M-A-C-K, nice abnormal price action, abnormal volume. And let's take a look at the 3-year weekly chart. I always like to look at that for confirmation to make sure that the pattern is good on both time frames. And in this case, we've got a fair bit of resistance here at $6, which is going to limit its upside. So I'd give this a 6 out of 10, just because I think a lot of selling will come out in that price range. And we'll take a look at BDSI. It was a great day trader. I day traded this stock on Friday. but also has a decent looking daily chart. A little volatile on the daily and coming into some resistance on the daily. Let's take a look at the 3-year chart of BDSI. Yeah, upside limited. I think I'd give this a 6 out of 10 as well. So that's a process. You have to know what to look for. I can teach you that. And if you want me to just do it for you, go take a look at the tradescores.com website. Subscribe to the daily trade alerts product, and you will get any of my picks as well as an email every night with my very short comments on the market. All right, well, that has been the Stockscores Market Minutes for, well, what is it now? August 17th, 2020. Have a great week in the market and trade well.